Hi guys, it's that time of the year, so it's end of financial year, just 1 week away, and it's really important that we run through some really critical things that you may need to address before the end of financial year. Some of them you may need to even action today. So let's run through some of those key things and see what we can do to minimize your business tax and optimize your tax efficiency. So I guess the important thing to consider is, imagine what you could do with all that tax saved. So we could be reducing our home loan, we could be topping up our super, maybe we're using it to go on a holiday after COVID's finished. It could be a deposit for an investment property or even upgrading the car. So I wanted to take this time to run through some key strategies to assist you in minimizing your business tax. Okay, so not everything's going to be applicable, but it's really important that you make a note of the things that are going to be applicable for you. I've also attached this guide for you to utilize as a checklist and run through. And I've also attached the personal tax planning preparation guide as well to assist you further. Okay, so let's run through some of the critical things here. So the firstly is your business a small business entity. So some people might not even realize or consider what that actually means, but for most of our clients, we automatically nominate you as a small business entity if that does apply to you. So it's going to be entities with turnover of less than $10 million operating business for all or part of the year in 2020. So the good thing about being a small business entity is there's a number of advantages that we have, like immediate write-off and reduced tax rates as well, which is fantastic. So the tax rates for the current year is 27.5% for companies, which is really good. And again, like I mentioned, it does enable us to look at the immediate write-off provision. So I'm pretty sure that this is well and truly been advertised in terms of the $150,000 immediate write-off. It has been extended until the 31st of December 2020. However, if you want to capitalize on reducing a tax for the 2020 tax year, you need to ensure that that purchase or finance has been finalized before the end of financial year. So that's really important. So if you're umming and ahhing about a purchase, you really need to make a decision about that today, because by the time you organize the purchase and the finance, we're really, the clock's ticking. So make sure you jump on that one. If you're not sure if you want to talk about finance options, then flick me through an email and I can direct that to our finance team who can assist and handle any questions or queries. But remember, the clock's ticking, so we need to action that ASAP. Other things that we can think about is maybe putting in some additional super contributions. I guess the key thing to think about this year is this is the first year that they're allowing for the rollover of the super contributions caps from previous years. So there could be an opportunity for you to contribute more than $25,000 in concessional superannuation cap. So if you're interested in putting money into super and you're not quite sure what you can do, then please reach out ASAP so we can get back to you and address those. And because there is a limited time, it takes time for the super fund to process it. So if they haven't processed it in time, you might miss that deadline. So really important that we action that ASAP. Okay, some of the other things to think about here, tools of trade. So looking at potential things that you could be buying in terms of tools of trade. So that could be computers, a notebook, personal electronic devices. Some of these things even include and are FBT exempt. So they might even be personal devices or devices that you've purchased for your children, but they can be FBT exempt. So your employees can actually purchase or salary sacrifice what would otherwise be classed as personal because of the FBT exemption. Again, if you want more information, reply back to this and I can give you links and further fact sheets to provide more info on the FBT exempt, particularly with the tools of trade. Again, if looking to do it, it's got to be done before the 30th of June to ensure you're capitalizing it for the current financial year. Okay, deferring income, that's a fairly straightforward and simple one. So if you're on an accruals basis, then you need to be looking at deferring your invoices. So when you raise your invoice, if there's an opportunity for you to raise it, on the 1st of July as opposed to the 30th of June, then you potentially want to consider doing that. If you're on a cash basis, then, seeing if you can delay any receipt of payments until after the 30th of June. Obviously, that's easier said than done. Sometimes we need that cash in our bank account, so we don't necessarily want to be deferring that, but something to think about there. The other thing is bringing forward your expenses. So have a look at certain things that you can actually advance pay as well, and prepaying some of those things. I think I even cover that a bit later in the guide here. But if you've got expenses or invoices that are outstanding, then pay them. Pay them before the 30th of June. So make sure that you get the deduction in the current financial year. And of course, if you need to top up on any materials and consumables and things like that, be sure to take care of that again before the end of financial year. Repairs and maintenance, particularly if you've got any rental properties and whatnot, they can be written off in the current year, so ensuring you get all those sorted as well. Again, the clock's ticking, so be sure to action that ASAP if that is something that's on your radar. The other thing as well is looking at deferring investments. So if you can possibly arrange for the receipt of investment income, whether it be interest on term deposits, or capital gains that you could potentially be anticipating, consider whether or not that should be deferred until the following year. So remembering, and this is a key thing here, the contract date is generally the key date for working out when a sale incurred, not settlement. So even if settlement is next financial year, if you go and sign a contract now, that will be considered the date of sale, not the settlement. So really important. So if you're in the midst of transacting with an investment property, and you're concerned about the capital gains tax that you could potentially pay, we really need to think about potentially deferring that. Motor vehicle logbooks. Now, this is a pain in many people's sides. Many of us neglect the fact that we have to prepare a logbook, but it's really important. I've just purchased a new car recently, so I know that I need to look at getting that in place. The challenge at the moment is some of us might not be driving as much as we previously would due to COVID, but in any case, we need to ensure that we keep a logbook for at least a 12-week period, and it needs to be within that 30 June 2020. So that's really important as well. And then if you are utilising the logbook method, you need to ensure that you keep all the receipts and invoices for your motor vehicle expenses. So the common ones are going to be your servicing, your fuel, if you've had to get new tyres or new batteries, or any other repairs and maintenance to your vehicle, your insurances, your registration, and any loans or interest that you've paid or incurred with that vehicle. So we have a motor vehicle worksheet, so if you're not sure about those things, again, flick through an email and we can forward that information through to you. If you're not wanting to utilize the logbook method, of course you can use the cents per kilometre method as well. The good thing about the cents per kilometre method is you just need to be able to reasonably substantiate. So what that means is, for instance, you say, I drive to the city, it's 50 kilometres return. I do that 4 times a week. That's 200 kilometres. And, I do it, do that for about 10 months of the year. And then we kind of extrapolate that out. So as long as you can, again, reasonably substantiate, you don't actually need a logbook. So really good for those who haven't kept receipts or done a logbook. Okay, so running down to investment property, for those who have an investment property, just ensuring that you've got a depreciation report in place, particularly if you have recently purchased one. The rules have changed though, so gone are the days where you've been able to claim depreciation on something that you hadn't actually incurred the original expense or purchase amount for. So it might not be as lucrative, and it really just depends on your personal circumstances and that individual property. If that's you, again, flick me through an email and we will do what we can to respond. And yeah, so depreciation schedule, that's the tip on that one. Private company loans. So if I haven't already discussed this with you, I will be hitting you up. We need to ensure that if you've got a loan outstanding to your company, that loan is actually repaid. And if it's not paid, then there's a couple of issues that are going to occur there. One, that you could incur interest repayments. And 2, the biggest issue is that you may have to declare that loan, or at least the repayments, as a dividend, as income for you. And if it's not done correctly, it'll actually be an unfranked dividend. So even if the company's paid tax for it, you don't get those credits. So you effectively get penalized by having to double pay on the tax. So this is really serious. This is probably the biggest area that we focus on when we're doing business tax returns at the end of the year. So again, really important, if you've got a business loan that is outstanding to the company, that loan is actually repaid. So again, we've already reached out for those that's applicable. For anyone that I haven't, they'll be getting an email on the next day just to make sure that things are in order. And if you are concerned that this could be you and want information, again, reach out to me and I'm more than happy to run through that and confirm where you're currently sitting. What else do we have? So we have prepayments. Again, I mentioned this kind of briefly just before when we we're talking about expenses, but with small businesses, you can actually claim a tax deduction if you have a prepayment up to 12 months. So not if you prepay something for 2 years, you could only claim half of that, only if you have a prepayment for 12 months. So that could be loan interest, it could be rent, it could be subscriptions, even accounting fees. We've got a lot of clients who choose to pay for their accounting fees upfront, and that way they get to have the tax deduction in the current financial year. So if you're wanting to do that, just touch base with myself, flick us through an email, and a wonderful Marie who manages that side of things will liaise with you to look at adjusting your accounting package so you can instead prepay. And again, that has to be done before the 30th of June. Trustee resolution. So the wonderful Kayla has been managing this side. Quite a big job. We go through all the trustees, analyse all the clauses, review the ABR register to ensure all your details are up to date, ensure that your trust deed is the latest and doesn't require any further amendments or adjustments, and that the appropriate persons stated within the trust deed are also still correct. The key thing with the trustee resolution, what does that actually mean? It's a minute and documentation to declare how the income within the trust is to be distributed for that year. So the really big risk that we have, if not done correctly, is that the trustee of the trust could potentially pay that tax. Now, their tax rate is near 49%, so effectively it would wipe out half of your account to tax if that trustee resolution is not correctly put in place. This is why we take it so seriously. So we're working on that at the moment. If you haven't already received your trustee resolution, again, you should be getting it in the next couple of days. The trustee resolution really can only be generated once we've finalised your tax planning. Reason being is that we need to understand your income and how those funds are to be dispersed in order for us to effectively put in that trustee resolution. So again, we'll be in contact. The beauty of technology these days is that Kayla will be sending those out via our wonderful Suite Files system. And once she sends that out, you'll be able to digitally sign and send it back to us, and it automatically gets saved down to your client file, which is just awesome. Okay, so lots of really important stuff here. So please make note, if you think that this could potentially apply to you, but you're not quite understanding, you need more information, then you need to reach out and flick an email back so our team can appropriately assist and guide you with that. Okay, we are almost there, guys. So the other one is year-end stock take. So this is a really important one. If you've got stock, if you're carrying stock, I know it's painful that you have to do the stock take, but you have to do that stock take. I've heard awful horror stories with clients of accounting colleagues of mine who have been severely penalised by the ATO because they have incorrectly stated their stock. So, you know, there's an advantage for somebody to understate their stock, because if you have stock, you can't claim that as a tax deduction. And so there's an advantage there to state your stock less than it actually is. The problem is if the ATO comes and knocks on your door and checks it and you've said you've got $20,000 worth of stock and it's actually $200,000, then you could be in a bit of difficulty there with the ATO. So what we need to do is we really need to make sure that we get those stock takes in order. So really important that we get that happening. Make sure you schedule it in with your team, and we'll be hitting you up early in the new year to obtain that figure from you and to ensure that we have that information when completing your tax return. Okay, so and then the other one is bad debt. So if you've got some customers who haven't paid you, that you know that they're not going to pay you and it really needs to be written off, then we need to be looking at addressing that as well, just to ensure that you're not paying tax on something that you're never going to receive. The good news is with the bad debt, in terms of things being critical or time critical, again, we can look at that early in the new year when we're preparing your getting your accounts ready for doing your end of year tax return. But still just as important, even though it's not time critical. Okay, so what I'm going to do is I'm going to go back and I'm going to recap on various things that are going to be really important. Of course, you have this checklist. Please look at it. Please make sure that you speak to me if there is something that we hadn't already discussed or that you need more information about. As you can imagine, some of these things can make a substantial difference to the tax that you pay. So really important that we take this seriously and we address those things in a timely manner. Otherwise, we might miss out on claiming that tax deduction. So, for instance, I know that we've got a client at the moment who's looking at a large piece of machinery. It's just under the $150,000 amount, so they're able to write off the full amount. And for them, it's going to be, approximately $50,000 in tax that they're going to save this year, which is just absolutely incredible. So big savings that they're going to be able to utilize to cover the initial repayments of that, but also just help the young business. They've been going for less than 5 years. Just really helps their business to establish and keep cash flow in their business as well. All right, guys, so best of luck. Again, make sure that you address these things ASAP because the clock is ticking. And if you've got any questions, just hit me up and shoot me an email. Thanks, guys.